In this video, I am sharing so many ways to boost your net worth swiftly in 2026. According to a poll on my channel, the top financial goal most of you crave to achieve this year is expanding your net worth. So, I'm certain today that if you can even apply just one of these tactics, your net worth will surge. So, let's dive into number 1 today, which I call the 1% rule. One of the quickest paths to grow your net worth is simply to curb the amount you splurge on impulsive buys. And this is where the 1% rule shines. It declares that you should pause deeply about any impulsive purchase that exceeds 1% of your net worth. So if your net worth is $20,000, you want to pause before any splurge around $200 or more. If your net worth is $50,000, then any splurge of $500 or more, you should ponder, and so on. The less cash you lavish on impulsive buys, the more you can funnel into assets to truly expand your net worth fast. If you have a net worth of $20K and you make a $200 splurge or 1% of your net worth every single month, that's akin to $20,400 per year. But yearly of your net worth, that's 12% of your net worth. This same pattern over 40 years could rob you of $671,474 across your whole career. And I think that's wildly insane. This 1% rule matters when you're below $100,000 in net worth because, as you know, most of the hurdles in growing your net worth will be at the start of your path. Eventually, as your net worth crosses $100,000 or $200,000, we can ease this rule a tad and spend more freely. But ideally, by the time you hit 100K, you will have embedded a habit of truly pausing before any major buy. In general, I prefer to wait a week or even up to a month before locking in a major buy because time will truly unveil to me if I truly crave that tempting item or not. The second way to boost your net worth fast today is to unlink your time from your income. If you truly want to amplify your net worth a lot this year, seek pursuits and careers that reward you based on how well you excel and not your hours. So let's actually hear this clip from Naval Ravikant and what he shares. The first step if you're going to earn money is that you're not going to get wealthy leasing out your time. Even lawyers and doctors who charge $300, $400, $500 an hour, they're not getting wealthy because their lifestyle is gently rising along with their earnings and they're not stashing enough. They just lack that power to retire. So the first move you must make is you have to own a slice of a venture. You need to hold equity either as a founder, an investor, stakeholder, or a brand that you craft that accrues to you to gain your fiscal freedom. All right. So there are 2 points that Naval is making here. The first is that you must keep your lifestyle in check because he sees doctors and lawyers who earn $300 to $500 an hour and actually not building riches. Now, this theme of dodging lifestyle creep and living beneath your means is one of our tips for later in this video, so we'll delve into that more a bit later, so stay tuned for that. But the second point that Naval highlights is that to get affluent and boost your net worth fast, you really need to have some form of equity, as he loves to term it. In other words, you won't get rich leasing out your time. He states that you need to own a slice of a venture. But I believe that as long as you have a career or pursuit that pays you a portion based on how grand the deal or how thriving you are is, then I think that's a superb way to expand your net worth very rapidly. So just to offer you an example, a realtor, they earn cuts on property sales. So the pricier homes they close, the larger a portion they pocket. Often the effort to sell a multi-million-dollar home, say a $3 million home versus a $1 million home, is likely quite alike. But the outcomes will be hugely different for that realtor. The downside is often that these kinds of roles demand you to be deeply driven, and that's not something everyone has. So you really must know yourself in these scenarios and know if you can be a self-driver or not. You could still expand your net worth by working a high-pay role on an hourly basis, like being a doctor or a lawyer. But if you truly want to boost your net worth fast, you're going to have to find a role that unlinks your income from your time. Method number 3 today is to invest any bonus or surprise cash whenever it flows to you. So throughout life, for instance, you will encounter surprises or bonuses. That could be at your job, you could snag a bonus, you could get an inheritance, a tax rebate, or through some flash of luck like the lottery, you might score a lump sum now and then. When these events occur, the best move you can make is to act as if that cash never existed at all and just pour it all into investing. In reality, this is much simpler said than done. And I'd bet that 99% of folks who get a bonus or a tax rebate of $5,000, they'll crave to spend some of it. So instead, I think a practical approach would be to take 10% of whatever surprise is coming your way and treat that as your fun splurge cash and then invest the remaining 90%. That way, at least you're reaping from getting your bonus cash. It's still a solid balance here because the bulk of it is still going toward your future self, but at least you get a little cash to enjoy. To show how potent this is, picture you get a tax rebate of $3,000 every single year and you're able to invest 90% of it, So, $2,700 over even just 20 years. That can compound to an extra $133,000, all from being steadfast when you get that surprise. So, ensure to do that, and let's shift to method number 4 today, which is to expand your income quicker than costs. This one might be a little too obvious, but I think there are 2 prime ways that you're going to grow your net worth fast. Okay, so the first is to have a higher income while your costs stay precisely the same. Or number 2, you want to have the same income while your costs drop. In both cases, you are widening the gap between what you earn and what you spend. So there are actually 3 handy ways that you can do this today. And the first is going to be job switching wisely. According to LendingTree, quote, when workers shifted to bigger firms, they saw the largest pay boosts. Those shifting to a firm with 500-plus staff saw an average salary boost of 15%, while those shifting to a smaller firm saw a 5 to 6% boost. In both cases, if you switch jobs, you seem to get a boost in your pay. And sometimes I think that if you linger at a firm for too long, the rate at which your raises happen to you slows down quite a bit. The issue is that firms aren't motivated to pay you market rate once you're already there. So, if you want to view it from the firm's angle, you're already doing the work, you've already agreed to the salary. So why would they freely give you a huge raise to match market rates? Now, here's the key. The market rate for your role could be 20 to 30% more than what you're earning right now. And when they hire someone new, since there's no salary openness these days in all of corporate America, you could have a setup where a new hire is earning 20% more than you and you've been there already for, say, 5 years. This is why job switchers often surge ahead financially because when you interview for a new role, you're bargaining from a market rate and not your current salary. The second way you can widen the gap between your income and costs is to boldly slash the costs side. This needs a bit of monitoring and strategy. But if you can list all the areas in which you spend cash, evaluate where you're overspending, and fiercely cut all of those costs in that bloated area, that is another superb way to lower your costs while your income stays precisely the same. And the third way is to craft a high-value skill to boost your income over time. These are skills that directly boost and create more revenue for your firm, or skills that are in super high demand, but there aren't many people mastering them. I've seen folks leap from $60K a year to $120K a year by mastering data analytics or SQL, which is a coding language to handle data. If you're a tradesman, you could enhance your skills by mastering welding, HVAC, or even electrical work. And I've also seen folks build a hugely profitable side gig by mastering video editing or digital marketing. This is a tad simpler said than done, but if you're able to devote 6 to 12 months spending evenings and weekends to mastering a high-income skill, it's another superb way to boost your income. All right, before we dive into our 5th method today, I just truly wanted to thank you all for viewing this far. It truly means a lot to me and the team on this channel. So if you are loving these videos on this channel, make sure to subscribe. It's totally free, and we would cherish it. So, thank you so much, and let's dive into number 5. The 5th method to boost your net worth fast is simply by monitoring it. 67% of Americans say they don't currently monitor their net worth according to Credit Karma. And I think that being aware of your net worth is an easy triumph and easy way to expand it fast, because I find that the more focus and energy you pour into your net worth, the more it naturally blooms. So, to compute your net worth, you just tally all your assets and then deduct any debts or burdens, and voila, that is your net worth. I've personally crafted a net worth tracker that is free to grab below in the description, and it's refreshed for 2026. It's surely more powerful, so make sure to check that out. I personally used to enjoy monitoring my net worth every month, but I found that that was perhaps a little too frequent. So, this year I plan on monitoring it once per quarter, and I'll keep you all updated on that journey, but the link for that spreadsheet will be down below. The sixth way to boost your net worth fast is to master your lifestyle pace. So, what does that really mean? It means that when you have the drive of boosting your income every single year, that's when it's very easy to inflate your lifestyle and when you should rein it in. Let me just share a few wild stats on major costs. Number 1, the full cost of owning and running a new car is $11,577 from Dale. The average yearly cost of owning and caring for a home in the U.S. is $21,400 in 2025, according to Bankrate. And the average cost of a getaway is now $7,240, according to travel insurer Squaremouth. And if you want to go abroad, make that $9,122. Lifestyle creep happens because as we earn more cash, we think that buying more goods and services will bring us more bliss and joy. But sadly, you may or may not know this already. What really occurs is that buying new things doesn't always heighten your delight and joy in life. True joy often stems from profound moments rather than new buys. So I would say focus on moments. Rein in your spending when it comes to your lifestyle and postpone status buys as much as you can, and I think your net worth will reward you. Number 7 today is to optimize your tax savvy. So this method is all about retaining far more of every dollar you earn without needing to earn extra cash. There are 3 main paths to do this in my view. So the first is to max out your 401k employer match and use your retirement funds wisely. For 2026, the 401k cap is now $24,500 per year if you're under 50 or $32,500 if you're 50 and older. For an IRA, it's $7,500 under 50 and $8,600 per year over 50. Adding to a traditional retirement fund is tax delayed, so that means it reduces your taxable income for the year you add to them. The second tactic is to use the retirement funds to actually shield your asset gains from taxes as long as possible. Every time you cash in a gain by selling a stock in a taxable account, you will trigger and pay capital gains taxes. But inside a 401k or IRA, you can buy, sell, and adjust without any instant tax hits. And over time, this growth can make a vast difference in your net worth. Also, you get extra perks if you invest in a Roth IRA where the gains grow tax-free. And the third method for tax savvy is to tax loss gather in your taxable accounts. If you have assets that are down in value, so as in they're losing, you can sell them to lock in losses, and that can balance some of your locked gains. Then what you can do is just swiftly buy a similar asset to keep your market stance and your mix. And this tactic lets you cut your tax bill, thus sparing you cash overall and still boosting your net worth. So make sure to seize the tax perks given to you. And now shifting to number 8 today, bargain everything. So I didn't know you could do this, but you can bargain for far more things than you think in life. I personally have a pal who used to take bargaining to the max and would try to bargain at the meat shop when he was buying steaks and fish. His logic was, well, if they can't sell certain cuts by a certain time, they'd likely rather slash them and sell rather than toss them. And to my shock, it actually worked for him at least sometimes, and that's what he shared anyway. Now, that's quite extreme. We don't need to be bargaining on a New York strip at the meat shop, but we can still bargain things like your salary, your utility costs, home fixes, wedding seller fees, etc. There are two key things to know about bargaining, though, which is number one, it is very, very awkward, but it can yield a lot of cash. If you start a new role and bargain your salary to be $5,000 higher than the first offer they give you, and then you do nothing else, but you get a 3% standard raise every single year, that one chat was worth $59,000. And the second thing you should know about bargaining is that bargaining for anything is done universally the same way. You must figure out what you crave, what you're open to accept, and then figure out what you'll do if your bargain fails. I'm going to link this Reddit post down below that guides you exactly how to bargain step by step, and it's surely worth reading if you're pondering bargaining for anything in life. Now, I've personally spared $600 to $1,000 per year just by making a few 15-minute calls to my various utility and insurance firms. In my case, last year it was on auto coverage, but you can also spare cash on other bills by calling firms and simply asking. A lot of firms will have loyalty teams whose whole role is to keep you as a client, and they have deals they can offer, but you have to ask, and it costs you nothing to ask. So make sure you at least ask. Method number 9 today is to automate literally everything. Most folks fail at expanding their net worth because they make choices too often. You can dodge all of this if you just truly automate everything. So, set up automatic shifts so that when your paycheck lands in your checking account, it gets automatically split into other spots you might need it to go. Say you get paid twice a month and you want to stash $500 per paycheck. You can set up an automatic shift from your checking to your asset account for $500 on the day after each payday. That way, the cash is gone before you have a chance to splurge it on anything else. The mindset here is simple. You can't splurge what you don't see, and you're not depending on willpower or recalling to invest every paycheck. It just occurs automatically. Here are the top 5 things to automate. In my view, it is going to be your utilities, your rent or mortgage payments, credit card bills, saving shifts, and asset additions. Automate your cash into those 5 areas, and then thank me later when your net worth has bloomed. And number 10 today is to boost your financial savvy. You can do this by viewing guides on my channel. You could read books, you could hear podcasts, or just dive through any content you can find on the topic of personal finance and investing. The return when it comes to boosting your financial savvy is basically endless because one great book or even one great habit that you glean from a book can cascade into wise choices, which cascades into more riches as time flows. Financial savvy can compound better than cash in my view because each idea that you learn will build on the prior one that you had before. If you grasp compound growth, for example, this stresses starting soon. Grasping tax savvy means you can shape your assets or your ventures better. And grasping mindset or the conduct of finance will aid you with choices in the long run. Most of this wisdom is free, and that's the charm. You don't want to ever pay a fortune for financial learning, as I gleaned a lot of what I know for free online. Folks who build riches are just the ones who make wiser choices with what they have. They aren't always the ones who earn the most cash. So, I think invest in your financial learning because it's the one asset that's sure to yield rewards for the rest of your life. If you loved this video, check out my video here where I share my 10 best tips on how to surge ahead of 99% of folks. I'll link it right here. I'll see you all in that video. If you want the tools I mentioned today in the video, please check down below, and I'll see you in a future video on the channel. Alright? Peace.